Hi, everyone. I'm Steve LaChance with Maine Real Estate Today, and I'm here today with Bill Kimball from Integrity Mortgage. Bill, welcome.
Hey, how's it going?
Good. Thanks for joining me. I love it when we do our sessions because we've been doing a lot of ongoing classes about programs.
Yeah,
and
I think
it's been
super helpful too.
Yeah, in today's episode, we're going to talk about how to get a home loan with no money down, which is, it's a trick right now.
Yeah, it really is.
Trick.
Especially after the market that we've just had, listing agents are picking the best offers. They're picking a lot of cash offers.
Right.
But now that time period's ending, we're going to start seeing more FHA loans. We're going to start seeing VA loans start become popular, and RD, which we're going to talk about today.
And I think we're already starting to see a little bit of that with homes that have been on the market for a few days. You're starting to see sellers not worry, but sellers are really starting to accept more options out there.
For sure.
But if you haven't been in this for a while, what we're talking about here is during the pandemic, we've seen a lot of offers going in on property and not a lot of stuff going under contract because it's just high competition.
Yep, exactly.
So let's talk about today how to get a home loan with little to no money down.
So we're going to look at Rural Development, or RD as we call it.
Yep.
It's a true 100% financing option.
Right.
Where literally I've structured deals where they get a check at the closing.
That's kind of cool. I have seen that. If you orchestrate it correctly, let's jump right into that. So you have cost when you purchase a home. You're going to have closing costs.
Yep.
So if we're doing we'll use the USDA program as an example. USDA requires no money down.
Correct.
You can combine that with some other products, but we're going to stay with the basics for right now. But no money down. The seller can pay closing costs. How much can a seller pay?
Up to 6%.
So up to 6% of the purchase price can be covered by a seller. So if you
That's
offer
usually always covered.
That's way more.
Close,
yeah, you probably don't need nearly that much, particularly on a rural development loan. The upside to that is if you go in aggressive enough with your offer, you can ask the seller to pay up to 6% of your closing costs, but there's another little trick that I've learned too. And it's not really such a trick in this market, but rural development will let you finance in your closing cost if the appraisal value comes in higher.
Yes, they will.
Yeah, now it's hard to know that when you're negotiating the contract,
Yep.
And you certainly don't want to make an offer on a property with the hopes that it appraises out higher so you can roll in your closing costs. You know how many times I've had contracts there, well, who's paying for the closing costs? Well, when the appraisal comes in, we should be able to roll those in, right? I'm like, boy,
yeah, you definitely don't want to count on that.
Yeah, no, I mean, but there are times where it does happen, particularly in the rural areas, which is what this program is designed for. And when we say rural areas, there's a map, there's a lookup tool that Bill and I can check when you have an address in mind for a property.
But we're not talking about 100 miles outside of Portland.
No.
It's literally, if you look at like the general areas of like Cumberland County, the only ones that are really excluded are Portland, Westbrook, South Portland.
Yeah. Yeah,
for the most part.
Yeah, and Biddeford, there's pockets that you can't. Westbrook used to be, all of Westbrook was okay at one time.
Yep.
Not anymore.
So it's always expanding. You want to check the map for eligibility.
Yeah.
But it's not like, you can be in Gorham, you can be in Buxton, you can be in places that are, 20 minutes from the city.
That's right.
And get rural development.
Yeah, and I that's such an important thing to know because too many buyers are saying, I don't want to buy something rural. And then, well, where are you purchasing? Wyndham. That's rural. It's technically, it will work in Wyndham.
Yep.
So it's considered a rural property, and I'm literally 5 minutes from everything in Wyndham, but it's something that does work.
Yep, absolutely.
So other highlights of the product, anything in particular you want to jump on before I started getting in technical?
I think the biggest thing is it's not a product for everybody. There's income guidelines on
Yep.
it. So there's an income gap, and you basically got to look at what county you're in Maine. And each county has a different limit.
Yep.
So if you're over that limit, and it's not just the borrower, it's everybody in the house.
Yep. Okay, so you stole my technical stuff I want to talk about because that's exactly right. So the very first thing that you want to do is actually talk with one of us, actually speak with your loan officer,
Yep.
because the first thing we need to look at is your total household income. If your household income is over that county limit by $1, you're not qualified.
Yep.
And the technical part about that, where it gets really confusing, is there are two calculations for income. One is for eligibility to the program.
Yep.
So they're going to look at all of your household income and project that out. If you have a side job where you're making just a few bucks extra, and it kind of fluctuates, they're going to project that money out and that calculation. So the entire household income, even if they're not on the loan, and then there is the approval amount, which is
who's actually on the loan.
Yeah, whoever's going to be on the loan. That's the income will be used to determine how much of a house you can afford.
Yep.
And sometimes the two types of incomes don't match up. For example, if you have overtime and you just started getting it maybe this year and you haven't really received a lot of it, that will count towards the eligibility of the program, but we may not be able to use it for how much house you can afford because the income is not really determined yet. And those numbers really come from Congress, I believe. So they're predetermined. It's not a lot we can do about, we'll see if we can make an exception in your case.
It's a specific program for low-income households. And it's not really low-income. What's Cumberland County is around $90,000.
The amount's pretty liberal. The amount is pretty high, and I mean that changes every year, but it keeps going up. How much household income can be. I have borrowers right now purchasing with no money down, and they have well into a six-figure income combined, and it works.
Yeah, that's great. And like I said, it's not we're not low-income like $40,000 a year. It's a generous amount. So
exactly. Yeah. So the very first thing, again, is to get pre-qualified by making sure that your income is going to meet the county limit for where you're purchasing. If those numbers work, you can do it with as little as no money down. If your offer is aggressive enough, you can have the seller pay up to 6% of the purchase price. Let's talk a little bit about that, too. If the offer is aggressive enough, sellers aren't going to pay closing costs out of the goodness of their hearts.
Yeah. So, at the end of the day, you're netting out what your profits are for the house, right?
Right.
So if a seller, wants to make X amount of money, anything above that, they can pay towards your closing costs.
Yeah.
So, say the listing price is $200,000 and you want the seller to pay closing costs, you're probably going to have to go over that $200,000 mark, and then they net out the same profit.
That's right. And that's where your agent, when you're working with a realtor, you should have a buyer agent that will run these numbers with you. They'll look at what the comparable sales are and say, listen, there's a little wiggle room in here. There doesn't seem to be any other offers on the table right now. So if you go in a little bit more aggressive, you could ask the seller to pay closing costs. Your agent may say you don't need to do that. You could go in at asking price or even below and still ask for closing costs. It's really going to be a location.
Well, this program specifically, and especially in this time period, you really want to talk to your real estate agent, because if there's 20, 30 offers on a house, you're not going to get it with RD.
And that's the downside to this. So if one of the pros and cons are listing agents, and sellers don't even know sometimes, but it's the listing agent's going to say, listen, this is a no money down program. There's very little skin in the game on the buyer side of this, and we have some other offers that may be a little lower or they're similar. Let's go with the, 5% down conventional program, because that, if anything goes wrong, they've got a little wiggle room to work with.
And it's tough too, because, generally a lot of people will qualify for a conventional loan, but they also qualify for RD. Right. And the seller doesn't necessarily know that, or the listing agent doesn't necessarily know that. So it does get tough, because the RD can be a better program, but you won't get the offer unless you do a conventional.
Well, that's true. So that's why it leads me to another point that you just mentioned. You should always have a backup plan too, because chances are, if you're qualifying for rural development with no money down, if you've got a little bit of savings, you may be able to go with a Fannie Mae Home Ready program, which it does have an income limit on that as well. Freddie Mac has a program as well. But the next closest one would be FHA, and we're not here to talk about those today, but those are programs with low down payment as well.
Well, the other thing too,
no down payment is definitely doable. Yeah,
and the thing is too, is if you have, you qualify for a conventional loan and you're using an experienced broker, we know most of the listing agents, right? So we can always call them and say, hey, this client qualifies conventionally. They're an A+ customer, but we want to go RD because it's a better program. They're not going to have to use any of their own money. Right. The interest rate's better. Blah blah blah. Yeah, and the annual premiums for mortgage insurance, although they don't call it mortgage insurance, those fees are less on a rural development loan as well. There is this is what we call RD Guarantee. That's the name of the product. There is a subsidized program for low-income housing that we call it RD Direct. And it's kind of exactly what it sounds like. You go directly to RD, take a course, and they'll teach you how homeownership works. And that will help you if you have really low income. Where they'll subsidize the interest rate to an even lower number right now to help you qualify for more of a house. The underwriting guidelines are very similar to a conventional, because you could even purchase a condo. And if it's Fannie Mae approvable condo, rural development will do it as well. As long as there's another agency that's willing to do it, if it meets the Fannie Mae requirements for a condo, you can do a rural development. You don't, like in the case of an FHA loan, you have to have that condo has to be FHA approved. Correct. And there's not many in Maine right now. No, not at all. Because we just haven't been using FHA loans. So they haven't had to get that new renewal process. Right. Yeah, I had one a few months ago where it was exactly that. They were really, we don't have 5%, but is this one approved for FHA?
And the answer was immediately no. I didn't even have to look it up. It was in Androscoggin County, and I don't believe there's a single one approved for FHA right now in Androscoggin County. So Shomil will fact check me on that.
It's tough because a lot of these loans are really just as good as a conventional loan.
Well, that's just it. So in this case, I said, hey, why not go rural development? He said, for a condo? Yeah, and we were able to do that.
Yeah. I think at the end of the day, both sides just want to know it's going to close.
Exactly.
So that's really when it comes to using an experienced mortgage broker, using experienced realtors, and just at the end of the day, as long as everybody knows that it's going to close, that's
exactly it. So to set some additional expectations on a rural development loan, I would consider them to be a lot stricter on ratios.
Yes.
Far less capabilities as far as stretching the envelope a little bit. Yep. Where there are a lot of times where it makes sense to push the envelope a little bit more. Maybe we're not using a spouse on a loan, and you run that through FHA's automated underwriting engine, and you get an approval on something with a much higher ratio. And we're not putting them at risk because we know there's another whole set of income we're not even counting.
Yep.
Rural development's not likely going to allow us to do that. They have a system called GUS. It's not a real person. GUS is not a guy you can call, but GUS stands for Guaranteed Underwriting System, and it's an engine that an underwriter is going to use to actually help make a determination on whether a loan is doable or not.
Yes.
And when that's run through that system, it's going to be looking for these things such as ratios. And off the top of my head, I don't have the particulars on the ratios with me, but I believe that their guidelines are 29 to 33% for a housing ratio.
Yes.
Which means that the underwriter is going to take your gross monthly income and compare that to the mortgage payment, including taxes and insurance. They don't want that to exceed 29 to 33% of your gross monthly income.
Yep.
The second number, which more borrowers are familiar with, is the debt-to-income ratio, and that's the same equation. Now we just add in your long-term liabilities like car loans and credit cards and so on. Student loans still get factored in even if they're deferred. So there's no real avoidance of that. We get a lot of that. I have
especially loans since COVID, because everything got deferred. That's right.
So it's not going to be, hey, I don't have to make payments on that. You don't have to make payments on it right now, but you will eventually. So they'll count, I believe it's 0.5% of your debt at that time. But what a great way to buy something with no money down. And if you gave an earnest money deposit, for example,
checks back at closing.
You could literally get that money back at closing if the seller's covering 100% of all the true cost. And it has to be all the genuine cost, of course. You can't factor in repairs or anything else that it needs, but literally 100% of it can be financed.
Yeah. And the funny thing is, I've found a lot of people just don't even know about this program.
Right.
The first time I ever did this for a client, and we structured it so they got a check back at the closing, both realtors were stunned. They had no idea how we did it. And how's the buyer getting a check back at closing? But it's how the numbers work. That's right. If you know what you're doing and you do it right, you can really make this deal really, really good for the clients.
And that's right. And as borrowers are shopping around, because this is more of a how-to video, so how to get a home with no money down is you've got to start out with getting pre-qualified.
Yep.
Very first thing you do, don't start shopping around and thinking you're all set. Credit's going to be important. Those automated engines that I mentioned, when we run that, it's going to analyze what your credit looks like. It's not going to be for somebody in the 500s when they're credit.
Exactly.
What happens is often, if you're watching this right now, what a lot of buyers will come to us and say is, listen, I'll just buy a fixer-upper. I know I don't have the greatest credit, or I have no money down, so I'm okay with buying something that's doesn't need anything, or needs a lot of work.
Yep.
That you can't have both.
Those deals aren't really in existence right now anyways. Lending is tightened up. Unless you're doing a construction loan or the total rehab loan, you're not buying any houses that aren't livable.
That's right. And some, that becomes subjective to what's livable. I've had some buyers it has no heating system. That's all right. I know how to do it. As a homeowner, I'm allowed to do my own. And true, but the bank isn't going to want to lend on that. They're going to make the assumption you have no skin in the game, you have little to no money down, that these things won't be able to get done in the long run, and it's just putting somebody in harm's way anyway. So if you've got a leaky roof,
if you're going 100% financing, that generally means you don't have a ton of money in the bank.
Right.
So if these problems that the house already has start multiplying, you're never going to get out of it.
Yeah, and you know what's cool about this program? It's not a first-time homebuyer product.
Yes.
You do not have to be a first-time homebuyer. You just can't have another primary residence at the time. So I've had buyers that are in a USDA loan, and we are closing on Friday. And Friday afternoon, we're closing on the new house going with a USDA loan.
Yep. You know what I've found too is, a lot of these programs that are technically first-time homebuyer programs, it's just a marketing scheme. Most programs out there right now are not designed for first-time homebuyers. They're for whoever.
Right. So they'll call it a first-time homebuyer product. These can be combined with Maine State Housing, although I haven't run into too many cases that the numbers still work.
Yeah.
But you can combine this with Maine State Housing, which is a grant program to get you some money towards down payment and or closing costs. So if you have a deal that you can't negotiate closing costs, that's an option.
Yep.
It does add some extra layers to the guidelines so that what ends up happening is
it's a state-run program, so they're going to be more strict on stuff, and they're going to be more, conservative. But if you do qualify, it is a great program.
Yeah, we definitely want borrowers to know about that as well. But the options out there really are fairly limited when it comes to a no money down program. You hear it all the time, like, well, there's dozens of no money down programs.
No,
they really aren't. It's just as Bill said, they're changing the name of the program to make it feel like, well, I have a first-time home buyer, no money down program. And I have one first-season people, not first-time home buyer, no money down program.
Yep.
Same program. It's just they label it something different. So it's important to know what a USDA loan can do for you, but it's so important that you start out with the very first steps. Get pre-approved.
Yes.
Do that early. If you're thinking of purchasing next year, you got to start now, because it's very important to not make assumptions on what's on your credit report. And it's very important to make assumptions that things need to be paid off. You don't necessarily want to make any sudden moves. Before you pay anything off, before you pay anything down, keep your money in the bank.
Yep.
Call us, we'll get you pre-qualified. That's step one. Making sure that you know how much you're eligible for. That's step two, but you also are going to need to know where you're going to purchase. So what you have to be careful of is you may say you're qualified for, I don't know, $200,000. Well, where? Exactly. Well, I'm looking in York and Cumberland County. Well, you might get different answers on how much coincidentally, I think those numbers might be the same, but different counties actually have a different income limit. Yeah. So where you're looking, if you're looking in a wide area, which most of my rural development customers are, they're looking in a wide kind of swatch of property. So it's of location. So it's real important to make sure you know that it's going to vary from location to location. Yep. You could be all set and then find out you're making too much money for the next one town over.
Yeah.
So I definitely see that as a big it feels like a big takeaway when you
for sure. Understand. So super important.
So that would be what I call step 3 is understanding your approval. Having a detailed conversation with your lender is understanding the approval. Next backup offer is you've mentioned it before, and I bring it up all the time. You need a plan B. Yeah, because if you get a seller you find that perfect one, the seller has multiple offers. I mean, you've seen it all the time.
You can't go in with RD. I mean, you might as well not even write an offer up. Yeah, in this market, at least.
Yeah. Again, I take the realtor's advice all day long on what they say, because they are going to, good ones are going to, talk to the listing agent. What do you got for offers out there? Whether they can tell them or not is, they have their styles and their way of getting the inside information, but knowing what they're up against for competition. So you might. I just had this conversation with somebody where nope, can you get us approved for conventional? Like, why not RD? Why not FHA? Yeah. That seller's never going to accept that.
Exactly.
And they've made an offer on it, and they got accepted. So it does depend. I've got one in Auburn right now. It's the house needs a lot of work. Yep. It's accepted. It's going with an FHA loan. And again, I don't want to get on the FHA product in this video, but we are looking at it doesn't hurt to try.
Yeah, exactly.
That's what I'm saying. Don't give up. Listen to what your realtor's telling you, but also listen to what your loan officer is telling you about what your options are. Because I guarantee you there's almost always another option.
Yeah, for sure. But
knowing that's the next big step. The next part of it, when we talk about no money down, chances are you can't have a home loan with rural development or any program for that matter with no money. There is a difference.
Yes, big
there is a difference. So we hear this all the time, and for full disclosure, when you buy a home and you have nothing to work with, first step, what's the first thing you're going to do? We got to get an appraisal and a inspection done.
So there's those out-of-pocket expensive, plus, some underwriting, depending on what your credit score is and your debt to income, is going to look for a couple months of reserves.
Exactly. That's a great point, because when we run those engines, I run them off and everything looks great. I'm like, this is going to be easy. And I run it and it says no. Why? We're wiping them out. There's no money left when it's over.
And what happens if, they lose their job right after, we close, or a medical bill comes up, or something that just wipes them out completely, and you don't have any money in your savings, you're automatically defaulting on that mortgage.
We call that the chance luck, because it's guaranteed. We bought our house in Auburn, and the very first thing that happened within 7 days of moving in, the refrigerator died.
Oh, God.
Crap. Water all over the floor.
But it's the little things like that. If you're tapped out, a refrigerator can set you back months.
Oh, yeah. And for one, it took months to get one. But in this market, it was kind of tough. But it did take a while to get one. We ended up having to buy one more expensive than we wanted to. But it's the little things you don't think of. Like, how much is a refrigerator? $1,000. You can get them for $1,000.
Yeah.
My wife wanted a $4,000 one. But the refrigerator that we ended up having to get rid of leaked and not just ruined the floor, but warped the floor. We were gone for a period of time.
Yeah.
It did some significant damage where now I needed a whole new kitchen floor on top of it. It's
and you
the
start
subfloor
digging
to come
stuff up, and it's just a nightmare. Yep.
Yeah, so point is, don't go it completely broke.
Well, it's like anything. You're buying a house, you are going to have expenses. Do not ever buy a house and think you're getting out without fixing stuff, because it's just not going to happen.
Yeah, I mean, if you're handy and you have family to help you, that's all
you still
great.
gotta buy material.
You still got to buy those materials. No one's going to just here's some materials. But the important part is knowing your financing and knowing that you can't just buy with no money. You will have some upfront costs to get you started. When you make an offer on a property, it's customary to offer an earnest money deposit, which is simply a check that you give a seller to show, I'm serious about my offer. And that
especially in this market, that can be $3-5 grand.
It can. And now an earnest money would just get applied towards the fees that you need at closing. So it's not an additional cost to the loan. And in the case of rural development,
you can get that back.
Get it all back at closing. The point of the check is to make sure you're saying, seller, I'm serious, I'm going to buy this house. I'm not just going to bail on you for no reason. But if I do, you get to keep my money.
Yep.
But if you see it through, that money gets credited towards what you need at closing.
And it's not necessarily bailing, too, because if you get the loan denied or something like that happens that you didn't plan on, you still get your earnest money back.
Yeah, that's another important one, because I have buyers all the time. So I'm out all this money because the appraisal didn't come in at the value we want. No, you're not.
This is if everything works perfectly and you just like, I don't feel like buying it now.
Yeah.
So
another thing for if you're a first-time home buyer seeing this program, when it comes to appraisals, a lot of times I get asked the question, so the deal's dead or the appraisal came in short, do I get that money back? No, you don't get your appraisal back. So it's an investment you make into a transaction to make sure that the home you're buying.
Because at the end of the day, the appraiser's still doing the work, no matter whether you get a loan or not. It's not like we're taking, appraisal fees are exactly what the appraiser charges now.
Right.
Back in the day, we'd take funds and we'd pay them, but now it just goes directly to an appraisal management company and we have nothing to do with it. Right,
that's exactly it. And the appraisals are all done by third parties, so they're not the banks making the decision on the value, it's a third party doing that. So literally, as we recap all this, you can purchase one with no money down, get your earnest money back at closing if it's orchestrated correctly. With the right deal, you can have the seller cover all of your closing costs. It is. What else would you want to add to this as far as?
The one thing I just thought of is, just because it's 100% financing, don't expect a really high interest rate. Because the interest rates are actually very comparable to a conventional or FHA. Sometimes I've seen them lower than both.
That's right.
It just really depends on what the market's doing. But if rates are 7% conventionally, don't expect to see a 10% rate because it's RD and 100% financing.
In some ways it can be a better payment than a conventional and you're putting no money down. I did run the math on one recently, and because the rate was pretty good and the conventional rate was comparable, it was a little higher, but it was comparable. The mortgage insurance for this particular borrower, they were in the because they were in the mid 600s for credit.
Yep.
And if you run on a conventional loan, what your mortgage insurance is with 5% down, mortgage insurance is a default insurance that you pay a lender as part of your monthly fees in your mortgage payment.
Anything if you don't put 20% down.
If you're putting less than 20%, you're going to have it.
Yep.
Even if they say you're not going to have it, it's
built in someplace.
That's right. It's just done in a different way. But genuinely, the monthly payment worked out a little bit better than the one I just did recently for that reason, because in the mid 600s.
So I tell people, don't stir away from RD. If don't expect a high. Just because you're getting 100% financing doesn't mean you're going to get a horrible rate and a high payment. Because generally that's what you would think, right? You get 100% financing, you're not putting any skin in the game. The rate's going to be horrible. The bank's going to rip me off. It's not the case. This is generally a design program for low-income rural houses and to get people to move out into these houses.
That's it. There you have it, guys. This is a USDA Rural Development Program. RD Guarantee is what we call it. You can do this with no money down, and you can even get your earnest money back at closing if you have all of your costs covered. So it's a great chance to be able to purchase a home, even if you have no money. Plan on having some reserves, a little bit of upfront money for inspections, but it can be done with no money.